saw a significant setback in the soy complex in Thursday's trade, but here at Bauer Trade, we have been somewhat watching for this type of decline because we've had these early soybeans coming directly off the combines in the very, very early stages of harvest, particularly in northern Mato Grosso, continue to be very, very good, in fact, ideal. I think the thing that we have to really address, though, is not only Brazil, where here at Bauer Trading we've put the crop now at 66 million metric tons, but we've also bumped up Argentina to about 51 million metric tons, Paraguay at 7 million metric tons, Uruguay at 1 million metric tons, and Bolivia at 2 million metric tons, for a total South American soybean production number as of today at a whopping 127 million metric tons. Now, the markets tend to keep a certain amount of weather premium in the price discovery until that adverse weather would not have an effect on the crop. So we've got about 2 to 3 more weeks to go yet on Brazil before we really know exactly how good they're going to be in the final analysis, whereas in Argentina we still need about 3 to 7 more weeks before we really know where they're at, because the problem, though, that we've got to digest with all this is if this crop does come in at 127 million metric tons, how competitive are we as U.S. producers going to be up against that type of pipeline flow in the global marketplace? In trading, I've seen the major buyers, led by the Chinese, at times come in and cancel previous purchases when they feel they can get the price bought at a lower level of need or of price or combination thereof. So what I'm trying to say is this has become quite a global market price discovery mechanism now. You cannot look at just these USDA numbers that are going to, you really got to step back and look at how this market is being impacted by Southern Hemisphere production. Right now, the Argentine corn crop is also rated very, very good, very little problems so far. That crop will also compete to a lesser degree than the soybean crops out of South America, but will still compete with the U.S. producer here in the United States. And then by today's market action, Thursday's market action, it does appear to me that the trade in general is still concerned about this global drop in stocks from an international standpoint going into 2010. And I've seen some pretty tight estimates based upon this continued good usage of corn out into 2010, 2011. But again, we'll know more about that when we look at the situation of the numbers that come off the USDA report on Friday. The other backdrop that I think we need to talk about here is how this ag market is being affected by the value of the dollar and or crude oil prices. And it does seem like when the crude prices do come under pressure, they tend to kind of sympathetically affect that ag market, particularly corn. And then overall, the commodity markets are quite aware of the value of the dollar, and the dollar has been slowly creeping higher here over the last 3 or 4 weeks. Not in any major sense, but it is starting to creep up. And if you look at the chart of the CRB, or the commodity index, and overlay it with the dollar index, you can clearly see that there's a pretty strong relevancy. When the dollar makes the bottom, the commodity market makes the top. The commodity market makes the top, the dollar normally makes the bottom. So that also must be factored into this price discovery. But looking at the estimates going into the report by the USDA on the 12th, the average trade estimate for total winter wheat acreage going into the report is 40.50 million acres. The interesting thing about the wheat acreage number, though, is that there's a relatively wide range of opinion. The highest trade estimate is 42.49 million acres, but you've got a low number clear down at 38.387 million acres. So I'm sure the wheat market will take a pretty solid look at that acreage number. That compares to the USDA 2010 2009 acreage number at 43.31 million acres. Looking at the next segment of estimates going into the report, let's take a look at the quarterly grain stocks as of December 1st, 2009, and these are in billions of bushels. The average trade estimate on wheat stocks is 1.759 billion bushels. The average trade estimate on corn at the present time is 10.722 billion bushels, and soybeans at 2.415 billion bushels. Highest trade estimate for wheat was 1.809. The lowest trade estimate was 1.695. So again, a relatively wide range there. Looking at this average trade estimate for production, and of course I think this is the one that has probably the most interest directly, because from a farmer's or producer's standpoint, because we're still trying to figure out just how big or how small, I guess in some people's eyes, this crop is in actuality. So you would think by the January 12th crop report we'd have a pretty good handle, but again, there's still a significant amount of corn still out in the fields, particularly in the northern plains, but these numbers will be, continue to be monitored until these crops are finally completely out of the fields. The average trade estimate for corn production comes in at an average estimate of 12.821 billion bushels with an average yield of 162.41. The highest trade estimate on corn production is 12.996. That would equal a yield of about 164.50. And the lowest trade estimate is at 12.576 billion bushels with an average yield of 160. That compares to the December estimate of 12.921 billion bushels, and at that particular time they used a yield of 162.90. Looking over at soybeans, the average trade estimate for production is 3.338 billion bushels. That equals a yield of 43.60. Highest trade estimate was 3.420 billion bushels with an average yield of 44.70. Lowest trade estimate was at 3.219 billion bushels with a pretty low number for yield compared to what the trade thinks. It's 41.90 bushels per acre, and that compares to the USDA December estimate of 3.319 billion bushels with an average yield of 43.30. So those are the general backdrop numbers of this particular report, but again, as I mentioned earlier, I think this is going to be a unique report because at the same time you're analyzing the USDA numbers for the United States, I assure you that most traders and investors will have one eye open on the weather forecasts and crop condition ratings for that southern hemisphere.
Okay, thanks very much for that. I have one question on the South American crop. With the dollar where it is, how competitive are we in world markets in terms of prices?
I continue to hear a lot of chirp by the Brazilian and Argentinian producers. They're really complaining about the value of the dollar being as low as it is versus their currency, the real. And that has cut into their profit margin pretty significant, particularly from an input cost standpoint. So this price coming down right when the value of the dollar is going up, they're kind of eyeing that to see if maybe that real will weaken up a little bit. But unfortunately, from a Brazilian standpoint, he or she is looking at a situation where the price is now coming down off what appears to be a very, very big crop coming out of the southern hemisphere. I think, Linda, the biggest factor that, as far as the dollar is concerned, is the fact that U.S. wheat, even with the dollar at this level, almost 22% below par, we're still about $25 to $26 per ton higher than most competitive world wheat price. So we're still got, in my opinion, U.S. wheat is priced too high compared to the global market, and you can see that by these very dismal, almost embarrassing low export numbers for U.S. wheat.